Okay, hi traders. Here's a new video. First of all, the risk warning. Your invested capital may be at risk. Don't trade with money you cannot afford to lose. And this video is not an investment advice. So let me see. This video is another live trading explanation video. Yes, live trading explanation video of those things which I have explained in my ebook. Get this ebook, is for free. You'll find the link in the description. And in the description, you will find also the link to the Facebook group. Join the Facebook group. You will not regret it. There you can ask your questions. There are really competent traders which will help you. And that was this one. And this video will be how to choose the right pair. Yes, because I have seen this question in the comments to trade. Yes, and I'm going to do a put now because I understood from this candlestick here that we are not going higher, that we are going down instead. And that was only here an exhaustion candle of this uptrend, because you see we are going far away from the 2 deviation Bollinger Band. That means to me that here can be at any time a reversal, and because this candlestick stopped there and this closed here with a gap, I'm pretty much sure that this will be in the money, and that's the reason why I did the put. So, but after this trade I will choose another pair, and then I'm going to show you how I decide to trade this pair or not, depending on those things which I have explained in the ebook. And I have to remind you those things, yes, because my trading setups are based on 4 things: the key level, the trend, the major key level, the trend, the candlestick pattern, and the rejection. And if I have those 4 things together, I will enter into a trade. And that is how my trades are based. And based on those things, I will decide if I'm gonna do this trade or not. Yes. So okay, let's see what will happen here. I entered here without how it's called. That was not accidentally. Yes, I don't know. Double clicked. I clicked on the plus sign and then I entered here immediately. And you can see it looks like I have a lot of luck, and this will be in the money too. Yes, but this was accidentally. I didn't want to enter into this trade. So let's see what will happen. And after this, I will choose another pair. And then I'm going to show you how I choose the pair or not, depending on what this pair is telling me. So you see, this will be in the money by accident. This is also, sometimes also luck is working. So let me see, I'm going to show you some other pair here, for example, this one. So this looks not so good. This is a ranging market here, yes, and I see here a lot of wicks. This shows indecision, this shows indecision. I see here large wicks, here wicks. This was an uptrend, and then we got here a reversal on this high here. That means to me that is not looking so good, but I can trade also this one, yes, if I want, because my trades are based on those things which I have explained: the trend, the key level, the candlestick pattern, and the rejection. So look at this, and now we are getting this what I was expecting. Yes, a candlestick pattern which is significant. The trend will be down, yes, and the key level is the 50 EMA, and that's the reason why I will do now a put, because we have another, and I'm going to show you this now. We have another resistance area here. This is a round number. I don't know which number it is, but it's a round number. Yes, and so I have all things together to get a good trading setup. Also, if this kind of market was looking at the beginning not so funny, yes, it was not looking good, but it's not only a question of good looking market, it's a question if you get those 4 things together. Yes, the key level, the trend, the candlestick pattern, and the rejection. Yes, and if you have those 4 things together, you can trade every kind of market. It doesn't matter what it is. Yes, important is only that you get this together and you understand the direction of the market, because you see this is a ranging market, and that is a little bit risky, because it could be also, you could also get trapped in some consolidation. And you see, I entered immediately and it was in the money. Also, if this market was a really dangerous one with so many wicks. So let me see if I can show you another asset, because that was not so funny, because it was a really close one. So let me see what we have here. We have here a downtrend, looking like a downtrend, but we are in the minor uptrend at the moment. And I can only, and here you see, here was the market untradable. At this area, the market was untradable. Because if you see such wicks, yes, you have to avoid this kind of market, because this will only screw you. And now the market is looking a little bit better, but I will not enter into a trade if I don't get those things together, which I have told you already almost often in the videos. And those four things are the most important one, and that is the trend, the key level, the candlestick pattern, and this was the reason for doing a put now, the candlestick pattern and the rejection. And if you get these things together, you can do your trades without any effort, yes. And you see also this one will not shock me, because I'm pretty much sure that price will go down further, yes. And that is only because we are here in some kind of ranging market. And in ranging market, the price goes first of all in the wrong direction, and after this it comes back and enter into the right direction. And that was the reason why I was shocked, because I have done my trades choosing of those four things which I have explained. The trend, here this is the trend, the candlestick pattern, the key level, and the rejection, which I didn't need it, to be really honest, because I understood this from the key level. So I think that was a good and clear sign how I choose my trading pairs, yes. You see, it doesn't matter what kind of pair you have. Important is only that you understand those four things which comes together. And if you have those things together, you can do your trades. Obviously, in such a market here, you have to avoid. Such a market you have to avoid. But these are things which I have explained in these videos here. So let me show you this. In this video, for example, what was it? In this video where I talked about, let me see. I have talked about so many things. Let me see, where is it? About this one. Here in this video, I have explained what are to avoid. Yes, and you see that was something like a centipede and consolidation area. Yes, here avoid consolidation area and centipede wicks, and what you have to search for. And here you see, and that are the rules. You have to seek for a direction in the market. You have to draw trend lines if you don't see them on your eyes. Yet I see the trend lines. And chart patterns, AMA alignments, yes, all those things. You have to care about those things, and you have to try to avoid those things, and then you try to get those things here together, which I have explained here. Let me show you this one here, and that is the most important rules are this: the trend, the key level, the candlestick pattern, and the rejection. And I cannot tell you how often, yes. And the rejection is the minor part, yes. It's a plus. The rejection is a plus, but it's not the main concept. The main concept are those three things together, because they give you already more than 50%. That is already good. Above 60%, above 50% is better than flipping a coin, yes. But if you want the 80%, you have to get all those four things together, and then you have a good trading setup. And this trading setup you can apply at any kind of market, if you obviously take care about the conditions, which I have explained here in this video. And then you can trade every market. And you have seen I have done now in 3 different markets in a few minutes my trades without any problems, because it's not depending from the pair, it's depending of those 4 rules which I have named here so many often in my last videos and so on. So I would say this was be enough. If you like this video, do a like. If you didn't subscribe, subscribe. And if you have something to say, let me there a comment. And join the Facebook group, ask your questions there, so that everybody can benefit from your experience. And the other important thing is that I look almost for the next candle, not for the next 3, 4, 5 candles. My objective is almost the next candle, not everything else, because I need only one candle. That is later when I'm going to show you how to trade for Forex. You have to watch for more candles. And then you have to adapt this price action stuff a little bit, yes, because price action is only a short-term prediction. And but the thing is, you have to look only for one candle, not more, only one candle. And if you do this on this aspect, you try to avoid also such tradings which are dangerous. And that is also important, that you will be selective. So, okay, that was this one. If you like this video, do a like. If you didn't subscribe, subscribe. And if you have something to say, join the Facebook group or write something in the comments. I try to do videos which you asking me for, because I want you to understand those things. And if you think that this was not enough, I will show you some more videos about this, how to trade the right pair to trade. To do your tradings, yes. Obviously, also the time is important. So I would say this was enough. Stay safe and bye-bye.